All right, welcome to The Explainer. Today, we're cracking open the books on a real heavyweight in financial services. Aditya Birla Capital just dropped its latest quarterly results, and we're about to give you a deep dive into their report card. Yep, you heard that right. A Q1 report card for the 2026 financial year. So, the big question is, what grade did they get? Let's get into it and find out.
So first up, let's look at the big picture. Before we dive into all the nitty-gritty details, what's the overall takeaway from this quarter?
Well, right off the bat, the headline number is looking pretty solid. A profit after tax of 835 crore rupees. Now that's a 10% jump from this time last year. That's a steady, confident start that really sets a positive tone for everything else. So where did all that profit actually come from? Well, let's head straight into the engine room of the company, their absolutely massive lending business. And this is where their strategy gets really fascinating. It's almost like a tale of two different approaches. On one hand, they're being super careful, playing it safe with certain business loans. But on the other hand, they're hitting the accelerator, going full speed ahead on housing loans. So you might be asking, why so cautious? Well, we don't even have to guess. The CEO of Ashok Mulir laid it out plain and simple. When it comes to these small, unsecured loans for what they call MSMEs, that's your micro, small, and medium-sized businesses, there are still, and this is a direct quote, uncertainties. So what did they do? They're tightening their lending standards. It's a really clear sign of smart risk management. And you can see the result of that caution right here in the numbers. The money they handed out for these unsecured business loans actually dropped by 8% compared to the last quarter. They're deliberately and strategically pumping the brakes here. But wow, look at the other side of the coin. While they're being cautious over there, they are absolutely flooring it over here. Loans for housing finance skyrocketed by a massive 76% compared to last year. This just perfectly shows their two-pronged strategy in action. Manage your risk carefully, but jump on growth when you see a great opportunity. Okay, so that's the lending story. Now let's check out some of the other powerhouses they've got in their portfolio, specifically investing and insurance. And when you see how much they're outperforming the competition here, it's pretty staggering. Just look at this chart. Aditya Birla's life insurance business grew its new business by 23%. Compare that to the rest of the private industry, which only grew by about 8% on average. Think about that. That's almost triple what their competitors are doing. They're not just growing, they're really starting to dominate. And guess what? It's pretty much the same story over in health insurance. This chart shows their slice of the pie among what are called standalone health insurers. In just 1 year, they went from 12.5% of the market to 14.5%. That's a 2 percentage point jump, which, let me tell you, is a huge deal in a market this competitive. They're just steadily taking more and more turf. And hey, not to be left out, their asset management arm, the folks who handle mutual funds and investments, they just blew past a massive milestone. Their average assets under management are now over a mind-boggling 4 trillion rupees. That is just a huge number. Okay, so the current businesses are clearly firing on all cylinders. But what about tomorrow? How are they preparing for the future? Well, it looks like the secret sauce is all about their digital strategy. Now, a key piece of this is something they call omni-channel architecture. It might sound like a corporate buzzword, but the idea behind it is actually super simple. It's all about making the customer's experience totally smooth and connected. It doesn't matter if they're on the website, using the app, or actually walking into a branch. And listen, this isn't just some idea on a PowerPoint slide. It's happening right now, and at a massive scale. Their platform for regular consumers, called ABCD, has already signed up 6.4 million customers in only about a year. That's just incredible speed and shows you the power of their digital-first thinking. And they're not just focused on individual customers either. Their Udio Plus platform is built to be a one-stop shop for businesses. This thing has already scaled up to manage over 3,600 crore rupees in assets, tying right back into supporting that business ecosystem we were talking about earlier. Phew. Okay, we've covered a lot of ground, from their lending game plan to their big digital push. So what's the bottom line here? What are the key things you should walk away with? All right, here it is. First, the overall growth is solid and steady. That growth is being driven by a really smart dual strategy in lending. You've got caution where there's risk and full-on aggression where there's opportunity. Meanwhile, their insurance businesses are just crushing it, totally outperforming the market. And looking ahead, those digital platforms are clearly their engine for future growth. Finally, and this is a really key point, their operating leverage is starting to pay off. Basically, what that means is, as their revenue goes up, their profits are going up even faster. Why? Because their costs aren't keeping pace. They're getting more efficient, more bang for their buck, largely thanks to all that digital investment.
And all of this kind of leaves us with one big question, right? When you see this balancing act, this aggressive push for growth on one side, and this super careful risk management on the other, you have to wonder, is Aditya Birla Capital not just growing for today, but actually building a financial fortress for the future? Definitely something to think about.